blockchain consultant, derivatives trader, and creator of Liberty Life Trail, Tone Vays.
Hello, everyone. All right, so I got a little funny story. So about 5 days ago, I get a text message from Nathan, our chief cat herder, and says, "Hey, Tone, so the cryptocurrency day, because I'm known for my Bitcoin presentations, so the cryptocurrency day is all booked. I'm gonna put you on the first day, and you're gonna be following G. Edward Griffin. And since it's not a Bitcoin day, don't talk about, your presentation it shouldn't be focused on Bitcoin." I'm like, all right, I got 2 days to make a brand new presentation, has nothing to do with with Bitcoin. Good luck, here we go. But I'm always up for a challenge, so this is great. All right, well, I'm gonna go ahead and start. So can we get perfect. I'm actually not sure why the bottom bar isn't going away, so I hope that doesn't interfere with anything in the presentation. So my background is, I'm gonna go real quick over my background. I was working on Wall Street for about 10 years. I left in 2015. Some of the companies I've worked for were Bear Stearns and JP Morgan. Bear Stearns famously collapsed during the crisis. And I joined the crypto world. I fell in love with Bitcoin, but I do trade for a living. And today I want to talk to everyone about the stock market and investing in general. Because the previous J. Edward Griffin is famous for his book, Creature from Jekyll Island, about the Federal Reserve. And I thought it would be a good time to talk about investments since the Federal Reserve. There's nothing we can do, right? We have the Fed. It's debatable whether the Fed should or shouldn't have been created, but we have it. So since we have it, we have to deal with it, and we have to invest in order to have more and more prosperity. So here are my qualifications. Unlike the previous speaker, I don't have any notable qualifications, but this is my qualification. Last year, I stood on the stage and I gave my presentation. And at the end of the presentation, I said that gold was not a good investment. I would sell gold and I would buy stocks. And I also did a Bitcoin presentation talking very highly about Bitcoin. So my unofficial investment recommendation was to buy the S&P 500, sell gold, and obviously I'm a big fan of Bitcoin, though it's hard to recommend Bitcoin because it's so new. So how did I do? Well, I was a little bit wrong on gold. This is as of 2/21 when I made my presentation. Gold was up $10. I expected it to do a lot worse than that, so I was a little wrong on gold. Gold was up $10, it made 0.82%, but the stock market made 25%. Now, you can say that it's rigged, you can complain about it, but the reality is, had you put all your money into the S&P 500 last year, when I said I'm very bullish the stock market, you would have made 25%. And Bitcoin, of course, did a lot better than that. It returned 164%. So that's, and you can go back to last year's presentation. So this year I decided to do something different. So right after I got that call 5 days ago, I said, let me take a look at the stock market from the day the Fed was created. And the Federal Reserve was created in this bottom right corner, this bottom red circle right there. Federal Reserve created in December 1913. It's unfortunate that the software I used to put this chart together, the data didn't quite go back there, but I looked up the price, and the price of the Dow Jones was about 50 points. And I threw it up on the chart, and I'm like, okay, so what patterns can I find? Because I'm a trader, and I always look for patterns. Okay, and a bunch of things jumped out at me, and I would like to talk to you about them today. Okay. But I really wish I had more data. I love making these charts, they're great. And if I go back even further, which unfortunately my software doesn't have, but I looked around on the internet and I found this. I know it's not in focus, but it's the value of the Dow Jones from the Revolutionary War all the way to today, okay? And it's on a log scale, but as you can see, it doesn't it looks fairly, well, it's on a logarithmic scale, so it's obviously kind of exponential, but it doesn't look all that unreasonable by looking at this chart. Of course, two things stand out. The Great Depression right here stands out, and I'm going to talk about that in my presentation because it happened after the Federal Reserve. But another thing that stands out, you can see what is the second biggest market correction in the history of America. And this area right here clearly stands out on the chart, way more than the 2008 financial crisis. And I took a closer look at this area, and it's from 1835 all the way to about 1863, it looks like, leading into the Civil War. And this was the elimination of the Second Federal Reserve Bank. Okay? So when we talk about we have to get rid of the Fed, you really have to be a little bit careful that this was a very, very difficult time in the financial world because the Fed was suddenly eliminated by Andrew Jackson. Some speculate that it was a personal vendetta because that federal bank was supporting his political rivals and why he wasn't president earlier in American history. And eliminating the Federal Reserve Bank, the second one, definitely caused some issues. And this was the Civil War. So again, markets didn't react well. Oh, there you go. Zoomed in a little bit. So I'm hoping to make this chart in much better focus like this. So as you look, I had the whole chart already. I threw up this channel here that kind of gave it stability. And the first thing you notice is the Great Depression really swung us a little bit too high up and then a little bit too high down. And what you notice is it's out of norm. People always talk about, well, the stocks are going to crash like in the Great Depression. What people forget is right here, the roaring 20s, where the stock market in about 3 to 4 years went up 4 times, 300%. Everyone always talks about how it lost 90% of its value, but people forget that they made 4 times on their money leading up to that crash, and that created the mania. So if you eliminate this unreasonable rise, the fall probably would not have been that bad. Sometimes you overswing to the upside only to overswing to the downside. So I decided to do a little bit of research. This was great. I actually enjoyed making a brand new presentation because I've never dug into the old times and what happened. And I started taking a look at the old headlines of what happened during the Great Depression. And it was a real panic. I had some depressing pictures and stories that I didn't want to throw on here. And what was even more interesting is what else was happening in the world and in America during that time. And you can like zoom in on some of these headlines and it's like, shot by a socialist, violent socialist, how times have changed, right, from 1929. It's right there. This is the day of the crash. So what else do we have? So everyone is familiar with what happened after the crash, and Roosevelt confiscating gold, making gold illegal. There were reasons for that. I'm sure a lot of people here know that. And this was the famous headline that gold was going to be confiscated. But that's the thing, the banks were holding all the gold. So in a way, it was confiscated from the people, but also it was confiscated from the banks. This was like a government attempt to remove private banks and make them more centralized, make them more government control. Like they never actually went door to door going after people's coins. They wanted to they actually wanted to make banks a little less powerful by taking the gold away from the banks at the same time with the people. But the 1930s were also a very interesting time, again, in some of the headlines that you would find. So this was another headline I ran into when doing my search. Of course, doing a little more searches, you find out, oh, maybe it was a little different, right? So again, fake news, not much has changed from 1935. It's also possible I was very heavily trolled because I couldn't verify this original headline. I think it came from like some vampire site. So it's possible I just got heavily trolled, but I thought it made me laugh, so I thought I'd throw it in here. This is New York Times in 1935. So it's either a fake news situation or someone having a lot of fun on the internet. Okay, so now we're back to the market, right? So if we ignore this overshoot to the upside and overshoot to the downside, has the stock market been fairly consistent? Okay, so let's take a look. And I'm going to talk about some of these circles. Oh, by the way, some of the notable dates are circled. Here's the stock market crash. Here's the Great Depression. People also, there is lots of conflicting reasons for the Great Depression. I'm actually not going to get into the history of the Fed, but as far as the Great Depression goes, look, stocks recover, okay? Within a few years, stocks were back to where they were before the unreasonable rise. And eventually in the 50s, they made a new all-time high. But the Great Depression was actually caused by a bond crisis, okay? That was the main reason. Stocks go up and down, but when fixed income crashes, fixed income is always like about 10 times bigger market than stocks. So what you have to worry about is a bond crash. It's a lot, and that's what the main reason for the prolonged depression. Okay, so let's continue through the channel, and here's what jumped out at me. After an event, you have this period, and I have it here, about 15 years, and it loses about 50% at its low. And it had two very noticeable peaks and one noticeable low. And if you go further a little bit, there it is again. Two notable peaks. This one had a few notable peaks, one notable low, and then we break out to the upside. Okay? And here's the crash of 1987, which was another interesting phenomenon. And in the crash of 1987, everyone was comparing it to the crash of 1929. Just like in 1929, everyone was comparing it to the crash of 1907, which was the prior big crash. My original field of study in college was geology, and we studied a lot about the 2006 earthquake in San Francisco, the biggest earthquake America ever had. And then when I started reading further into the history of the Federal Reserve, which I'm not going to get into deeply, while the crash of 1907, some speculate was directly following the 1906 earthquake, because there was so much insurance fraud in order for people to get paid on their houses. Everyone says, well, the fire did most of the damage. Evidence is coming in. That's not necessarily true. That's what they told the insurance companies, which were on the East Coast. That caused a financial crisis. It's actually a repeat of 2008. And the financial crisis was so bad, the bankers wanted a lender of last resort to prevent the next crisis, and they got together to try and form the Fed. Now, whether that turned out to be good or bad is definitely debatable. I'm also myself leaning to the bad side, but there were other reasons for that. So in 1927 was bad. The stock market lost 22% of its value in one day. There it is, comparing it to 1929. And this was also interesting. If you look at some of these headlines, right? A repeat of 1929 depression in 87 is not expected. This was the Wall Street Journal. So they were right. Also, right here, this was another interesting headline. Percentage decline, 29, bond prices surge. And that was the difference. In 1929, after the stock market crashed, the bond market collapsed. Started in Europe because the war was coming, and moved on to the US. But in 1987, the bonds were not a problem, and the bonds actually went up. So that's why some of the analysts didn't expect this to actually last or turn into a depression, and it turns out they were right. Some other interesting headlines came up. Bernie gets 6 months. I don't know who Bernie was in 1987, that he's so important to go by his first name. The two Bernies that came up into my head, well, Bernie Sanders, considering our 1929 slide about violent socialists, or the other Bernie that came into my head was, of course, Bernie Madoff, which is like, man, people should have seen that coming if this is Bernie Madoff. So we don't know, right? So I thought that was interesting. I wanted to throw it in here. All right, so as you can see, the 1987 crash that everyone talks about, yeah, it was bad, and it gave us a great movie, Wolf of Wall Street, but on the long scheme of things, didn't really affect the markets that much, because within 2 years, we were back to new all-time highs. And, and this is my, and these were the patterns that I saw in this chart. You have this, after this low, and I'm going to zoom out in a minute, you have an average of 25 years to make the next high, and then 33 years to make a secondary high. And the interesting thing is, look at the difference in years between these two highs. It's 8 years. And it hit me just the other day. I'm like, oh, this is where the Shemitah, I believe the Shemitah is 8-year cycle or other 8-year cycles. And I'm like, oh, that makes sense. This is why people using the 8-year cycle instead of zooming out and looking at it from a different perspective. And that's what I really wanted to do. So in doing that, because I go back all the way to 1913 and apply these averages, we had this situation in 2000s where we had the dot-com crash, we had the financial crisis, and here we go. Once we broke out of this 15-year range, look, I didn't believe it either. I was a big gold bug. I always thought the stock markets are going to crash. But then when I looked at it objectively after graphing it all, I'm like, well, does this really look that unreasonable? And then I started thinking about it. Okay, so it's going up. Well, we have inflation. We have situations. Everyone is worried. Here's household net worth. And looks like household net worth is out of control. I'm sure everyone's seeing like rents going up, inflation going up. So households are richer than they've ever been. And yes, they're probably due for a crash. But look, here's household net worth in 2007. Yeah, it was a crash, but we're way higher now. So if we crash again, aren't we just going to fall back to the 2007 levels? We'll see. And the slide right next to it this is actually the NASDAQ and the tech stocks versus the Dow Jones. And again, you see the tech stocks got out of control in 2000. They fell back down, and they didn't go as high the second time, and now they're all the way up. And then you got to think about it. Our world is becoming more and more computerized. I really like the tech sector. I mean, everyone here owns a smartphone, right? Everyone owns an Apple phone. Everyone here has Netflix. Like, if you really think that Apple is overvalued, do you really think that Netflix is overvalued or Amazon? How many of you shopped from Amazon just this week? Maybe even from here, right? Are these stocks overvalued? Well, the market usually adjusts for that. And well, let's talk about what might be overvalued. Obviously, the banks was the big collapse, right? Because remember, if I go back, well, tech stocks were obviously overvalued in 2000, and the next time around, the market knew they weren't as valuable for the second crash, so they didn't do as bad. So what was the crash in 2008? It was the banking sector. So you see how the Dow Jones is at all-time highs by far. The tech is finally at all-time highs above. But let's take a look at the sector that we all hate, the banks, right? Well, the market agrees with you. The banks have just recently broken out, and look, they're still 20+% lower than they were in 2008 crisis. So the market knows that the banks are not a good investment right now. That's why the banks will still have time to go to its new all-time highs. So just something to keep in mind. And now we step back and take a look at the whole thing, and here you go. Here are my average 25 years. This is where I got the average from. I took these three upswings in the stock market from the lows. This is the Federal Reserve low. And that's the 33-year second peak on average. And I came up with this chart. And as much as I hate to say it, I don't know what's going to stop the stock market from going to $60,000 or $70,000 on the Dow Jones when it's right now 20. And even if the US has a lot of inflation, well, guess what? The stock market adjusts for inflation because the stock market adjusts for the technology of inflation. Okay? And by the way, this chart, I'm actually not joking when I said I actually put this chart together in half a day to a day with free software. Nothing proprietary here. This is all free. I'm actually, on Thursday and Friday, I am teaching a trading seminar where I give an introduction to trading, how to read these charts, and how to make these charts. Anybody here can make this chart. If I can do it in 30 minutes without anything proprietary, anybody else can do it as well. Here's another chart I put together. This was maybe about a month ago. I was going to be talking with Andy Hoffman about gold manipulation, and I wanted to get myself more familiar with gold, because I also thought that, well, gold is always a great investment. Again, I wish I had more data, but I didn't have, this program doesn't, it's hard. Historical data is very expensive and hard. So when you're looking at free historical data, you can only go so far. So this only allowed me to go back to 1976, okay? But in 1976, the S&P 500 and gold were both at about 100. Gold was $100 an ounce, S&P 500 was 100 points. So it gives us a nice baseline. And let's take a look at what happened. Gold had its bubble to 800, and then it started to go down, okay? And this is when everyone thought that the US is going to collapse, we're gonna have hyperinflation and all those things. And again, I started looking into it. What did people say back then? And okay, here we go, just zoomed in on that a little bit. And I found this very interesting article in People magazine, where Doug Casey was talking about the future of gold and markets, and he was expecting, he says it right here, warns that the US will enter a depression that will make the crash of 1929 look like a technical error. I don't want to pick on Doug Casey. I really like Doug Casey, right? But this is in print, and this is what people were thinking. Gold was $500 an ounce, and he was expecting it to go to 2,000 by 1983, okay? It has now been over 35 years, okay? We still have not seen gold in 2000, okay? There were other unfortunate suggestions, like property in Zimbabwe, a decent option that didn't really work out in the 90s very well. So again, you really got to step back and think, and take some of these things with a grain of salt. I know this is an unpopular opinion here, but you really got to take a look. What's a good investment, okay? And here we go. Let's take a look at what happened with gold. Now, a lot of people, again, because I was going to talk to Andy Hoffman, and I heard he said he got involved in gold in 2002. And I'm like, okay, so 2002 was an interesting time. So I went and took a look, and also Max Kaiser always talks about the early 2000s when he got involved in gold, and same thing with Peter Schiff. And it was very fortunate for them, because on this entire chart, the only period in time where your investment was of gold versus stocks was the better investment was this highlighted period. So from there to today, and by the way, the stock market is already up like 5% this year. So maybe in about, if it continues this way, then even this period would be trumped by the stocks. And here are the charts. And I went back and I did some math. So how much would your gold investment have returned you if you invested $100 in gold versus $100 in the S&P 500 or Dow Jones? I use the S&P 500. Dow Jones had better returns, so I went with the S&P. So in 1976, if you put $100 in gold, you would have made $1,550, but in the S&P, you would have made double that. But the biggest advantage that stocks actually have over gold is that stocks pay dividends, and you can reinvest those dividends. And it may not be a big deal on a one-year basis, but over 30 years, it's interest on top of interest on top of interest. And this is why people are like, oh, it's always the rich people. They're always making the money. The stock market's for the rich. Well, the stock market is also for everyone, right? Because everyone could have done that. And so if you put your money in the S&P 500 and you reinvested those dividends, your $100 investment from 1976 would have made you about $7,000 as of a few days ago, and the market is a little bit higher now, okay? And so the notable time right here, 2001, 2002, that's when gold was actually a better investment financially, and all other times, including the 2007 financial crisis. This is the interesting one, right? If you had the worst luck ever, and you invested, if you bought the high in the S&P 500 in 2007, I forgot what day it was. Well, I have it 2007, October. So like you were the unluckiest person in the world. You put all your money in the S&P 500 on the day before the stock started to go down in the financial crisis. If you didn't touch that money and reinvested those dividends, you would have a little bit more money right now on that investment than gold. I don't know what gold did in the last like 3 or 4 days, so don't so don't fact check me on this week, please. Yes, so I did one of these, and again, this was a surprise to me as well when I started looking into these charts and looking into the math. And here is and this is not the dividend. I couldn't find the graph of the S&P 500 that was dividend reinvestment. This is just the S&P 500 without dividend reinvestment. And this is where we are today, or a few days ago, versus gold. Another thing that jumped out is the pattern. This pattern of the bubble in 1980 looks eerie similar to the bubble right here. Like even this blip right here looked so much like this here. And by the way, this was also very, very interesting because when the stock market crashed in 2008, gold crashed along with it, and then it went back up. Okay. Again, I'm saving whether gold is being manipulated or not. I actually have a 2-hour video, my conversation with Andy Hoffman, about the manipulation of gold. So it's another thing I recommend. And then we go up from here all the way up, just like we did going into 1980. And then we had a big fall, and then we had this rise. This is last year, from December into early this year. And that is also, this looked to me like right there. So I said, wow, is it possible that we are sitting right here, right now? And if we are, is it possible that gold is going to continue down just like it did throughout the 70s, throughout the 80s and 90s? Because gold had, this was about a 26-year correction. And to me, I mean, I don't believe it myself, but is it possible that gold is going to repeat this same pattern and finally bottoming in around 700? I'm bullish gold long term, but for now, until I see gold go above this peak, I'm going to be a little bit cautious. And there is a second peak. Again, all I did was extend. I took a look at this, and I drew these lines following the prior path, and I even compared it with the dates. So this guy here is my equivalent to 2020. This is also the 1987 crash right there. Okay, so it's just a different perspective. Okay. Right, so that was actually it. I wanted to talk about gold versus S&P. I wanted to talk about the history of stocks and their returns. But my specialty is talking about Bitcoin, and I may not get to do that on the Crypto-Poco Day unless some anarchists get very, very drunk and aren't able to make their presentations. So I thought I would... I thought I would mention a little bit. This is a presentation I gave here last year, but it's been a year. A year in Bitcoin is like 5 years in all other markets. These presentations are online. I recently gave this in Toronto a few weeks ago, so it's very, very updated. This is the history of Bitcoin. Unfortunately, you can't see the date at the bottom, which is kind of bad. I'm not sure why this bar isn't going away, but yeah, so this is 2010. This was our bubble in 2013, and this was currently, again, this is like a week old, and we're already like up here, right? So this is like, you can't make these presentations fast enough. So I can't talk about the history of every bubble in Bitcoin. I don't have the time. I'm down to about 10 minutes. But these were, I normally zoom in, and I explain the reasons for all of these moves in Bitcoin. But this way you can just take a look, and here is the downside of Bitcoin. I'll briefly mention, this was a popular article that I wrote, why I think Bitcoin is useful, and my top use cases for Bitcoin. People usually like it when I zoom in on that. This presentation focuses on number 7, the movement of Bitcoin cross borders, but I can easily do a 40-minute presentation about every one of these voluntary contracts that Bitcoin seems to be doing very, very well at providing a major efficiency. Okay? And I also recently added this slide, which is the war on cash. We're all aware of the war on cash. And this was a great article from Harvard Business Review where they talked about my 3 reasons, the reasons I've been talking about for years. Governments, they want to do negative interest rates. They don't want people to have the ability to exit the financial system. They don't want, they can't be a run on the bank if there's no cash, right? I mean, there's nothing to, there's no ATM machines. There's nothing to take out. And more importantly, and they mention it here, every government thinks we're all tax evaders. And the reason why they haven't created this utopia of, for all of us is because none of us are paying our taxes. That's basically their view, right? So if only they can collect all the taxes, they would solve all of our problems. And they think cash is their biggest problem to solving those taxes, okay? And again, since I do these videos and I talk about price all the time, here are my projections. This is an article I wrote in 2014. And the first time I ever gave this presentation was right here in Acapulco 2 years ago now. And I talked about 2015-46 being a probable low in the price, and the day actually corresponded to the Greek banking shutdown. And this has been around for almost 3 years now, and I'm looking for a high in Bitcoin this August. I don't know what's going to cause it. I kind of have an idea. It's probably going to be SegWit and Bitcoin finally scaling, which I'll mention in a second. But I do want to go through my price projections. I don't have the time to get into it. Again, this is normally a 40-minute presentation on its own. I don't remove any of the old charts. The first time I ever gave this presentation was right here in Acapulco. It was right on this day, right here in February. Right around here in February of 2015. And I was looking for a low in June. Here's the Greek crisis. Unfortunately, I was wrong on the price. I was looking for a price in the low to mid hundreds. We hit the price a little too early and then a little bit after, but the trend did change. And we've been in this channel. I've been showing this channel for over a year. I love the fact that we're staying in this channel. And if I zoom in on that some more, we're already like up here, and I know we came back down. So it's funny. I took the screenshot 3 days ago. We went up to 1220. And now we're back to exactly where we are, like around 1133. 1140, excellent. This is another view on the chart. And again, I personally like repeating patterns. I like how we were bumping up against the previous high, break out, bump up against the previous high, break out. And then I did this. Well, now we're going to bump up against it again. This is the 1130 line, and I'm expecting it to bump around here going into the summer. The Bitcoin ETF is causing a little bit of an advantage. And if I zoom in on this, this was an actual Twitter discussion. When the prices started to fall down, people were tweeting at me, oh, right here is 900 is the perfect time to buy. I replied, I would say 750 to 775 would be perfect, but around 900 is okay. So I saw this as an okay buy, and I saw 757, let's say 760, right in the middle here, as a perfect buy. Here is 760. Here is 755. On this day, people tweeted at me, getting close to 760, still going to sell up to pile in. Because I kind of jokingly said on my podcast, if we fall from 1150 to 750, I'm going to sell maybe my apartment and buy Bitcoin. And then I actually said that. So people tweeted at me saying, hey, Tone, are you still going to sell like all your assets and buy Bitcoin at 760? And I said, no, probably just mentally. I wasn't actually going to do that. I'm not that crazy. I said, but if someone wants to sell me some Bitcoin at 760, please private message me. I will gladly buy it. And then the next day, here come the tweets. If Bitcoin holds 775, Tone, I mean, I've been wrong too, guys. I'm not always right. This is just I've been right recently, probably luck. And then other people said, yeah, I was one of the few people that literally called this, and I did it from over here, and it's all on video, by the way. I have podcasts on it. And here was my prediction. I was quoted on the first day of the year, what do I think about Bitcoin? And I said, I'm looking for SegWit, and I'm looking for 2,000 by end of summer. So on January 3rd, my prediction for Bitcoin was 2,000, followed by a correction, closing the year around 1,500 to 1,750. This is in print as of January 3rd, so we will see how I do. I could be horribly wrong. I could be right on that. I don't have time to play. This is, I'm not sure why this isn't coming up. But this was going to be the trailer for a movie called Magic Money. Me and Roger Ver are in it. And so please check that out. It's a good introductory movie about Bitcoin. The interviews were filmed right here in Acapulco a year ago. And here's my podcast, Crypto Scam. I started this podcast. I wanted to dig into a lot of topics in detail. So in my first episode, I explored the possibility of Bitcoin being a scam because I don't know, maybe I'm missing something, so let's find out. And then from there, I try to go after all the other notable crypto projects. This is manipulation of gold with Andy Hoffman. I also like taking the contrarian view pretty often. If everyone thinks something is A, I'm going to argue, well, maybe it's B. Okay? So in this debate, Andy Hoffman took the position that gold is perpetually manipulated on a long-term scale, and I took that position that it's only manipulated short-term to skim profits by big institutions. Okay, and here's my contact information, Tone Vays. My blog is Liberty, my website is Liberty Life Trail. I have multiple podcasts. I am going to teach an educational seminar here on Thursday and Friday, how to make those charts, how to read those charts. I don't sell any kind of trading strategies. I just try to educate people so they can read charts and make charts like me, and they have a better, they have some competition, or they don't get their pants taken in the stock market. At least they know why the investment didn't work out, but then you make your own investment decisions. And that's it, catch. You just Google me. I'm all over YouTube on multiple podcasts. I don't think I have time for questions, which is unfortunate. I have time for a couple of questions. Okay, I saw a hand up here. I was going to pre-answer questions. I don't think the ETF and Bitcoin is going to happen. I don't want it to happen. But again, if you are at my seminar Thursday and Friday, I can get into more on that, or check out, or Google me along with ETF. I think Trump or Hillary would have been great for Bitcoin in different ways. Trump might double down, like the wall and remittance to Mexico is great for Bitcoin if he doubles down. Hillary would have raised taxes, that's great. If Trump lowers taxes, that's terrible for Bitcoin. Your world flips. I wanted Bitcoin to be money, now I don't want Bitcoin to be money, because if it's money, a lot of bad things happen. And I'm also a huge supporter of SegWit. Maybe I'll debate Roger Ver later. I don't, a hard fork I believe is very dangerous for Bitcoin. All right, questions?
Okay, that's it.
Oh, that's it? Sorry,
Yeah,
here one?
Out of time right now. But
right.
Thank you very much.
All right, hit me up after. Thank you.
In a world where Antifa riots in the city streets, cops rage out of control, and the leader of the free world is a fat-ass casino owner, one event stands alone to make anarchy great again.
I actually love humanity. That is why I'm an anarchist.
Backwards in the building like we the ceiling, we illin'. No matter who find it appealing, I'm here and I got a feeling that we'll be dealing a lot of pain with a penicillin get drilled in your head. That we are monsters and yeah, we come from the slums, and for months we've been pumped, but for once I am now comfortable. I want to grow, I want some more success, and I want to know that greatness can't be rushed, can't be lost, so face the bus. Feel free to hate on us, we lace them up. Dudes, we done paid them up. Keep snakes away from us and safe from us, you might wanna be. Remember when clowns used to make fun of me and that they wanna be me, see me and they run at me. I'm gonna be the greatest, yeah I wanna be, but I am not the one to be the fakest for the sake of being played. I'm here, like I never left, said to hell. Nah, cause I can't just fail, so just prepare your ears, it'll get for real. Okay, from here, we will never take the sale, it's grind time. My mind and my thoughts, my highs and my faults, my wins and my loss. When will I fall off? It's a chance for me. You are now listening to Veracity. Yeah.
Fuck the media, fuck the banks, fuck drone strikes, fuck tanks, fuck hunger, fuck war, fuck ignoring of the poor, fuck the left, fuck the right, fuck the government. Thank you, thank you, thank you, thank you.